Hey guys, super happy and super exciting to be here once again. And today I'm with Roman. Roman is obviously a quant, but a quant with very interesting perspective from the industry and from his past experience and current experience that he's actually going through. I'm hoping that you'll have some fun and great experience listening to the conversation. I think that we're going to be diving deep into really interesting topics that will be able to benefit all the listeners, and I'm very excited. So yeah, without further ado, Roman, thank you for coming. I'm very happy for the opportunity to have you. How are you today?
Yeah, hello, Afik. Yeah, I'm happy to be here, and yeah, I'm good. I'm good, and you?
Doing good, doing good. Hopefully, we're going to be having a silent recording session. And yeah, let's start. So, before we're going to be actually diving deep into the topics, I would love if you can share about a little bit about yourself, about what you're doing, about your experience, about your background, and so on.
Yeah. I think I got a little bit weird or unusual path experience because yes, I have degree in applied math and rocket science. It sounds more fancy than it is, but yeah, after the university, I have decided yes not to stay in engineering field and go to the finance. Yes, and I have started like a risk manager. Yes, after a couple of years, I was interested about the quant finance. A couple of my colleagues mostly talked about it. Yes, and when I faced with this field, yes, I was interested and dive deeper. I got CQF. Yes, I think it's the most usual certificate in quant finance. And after that, I have started to my real journey. Yes, in quant space, like some usual regular quant on around the desk. Yes, I worked with different models, with different asset types, but the most desirable for me was derivatives, I guess, because huge part of CQF it's about how to price derivatives, yes, how to trade, hedge, and heavy math about it, yes. And after that, I just tried to yes build my own models, pricing some derivatives. After that, I switched to the small hedge fund in Moscow based. Yes, to be honest, after a couple of years, we decided that our model's not so productive. Yes, and I back to my first company. Yes,
Happening.
and what?
I'm saying this is naturally happening to everyone. That the model is starting to decay itself.
Yeah. When you hit all of this no free lunch on the market, I can add that now you even not have any lunch on the market, yes, because we have a lot of huge companies, dozens, hundreds, thousands of freshly graduated guys and girls from top universities in USA, in Europe, in Asia, and all of these firms they covered all markets, all asset types, and to be honest, it's crazy in the 20s trying to start your own hedge fund. Yes, even if you have money, even if you have a brilliant team, it doesn't guarantee you that you will have success, to be honest. Yes, and my previous experience told a lot about it. Yeah. After a couple of years, yes, my career was on the top, but I have decided to leave the Russia and move to the Europe. Yes, I was hired by asset management company, spent a couple of years there, was made redundant with whole my department, and after that, I again joined the small quant team. Yes, and we are trying to build our hedge fund again. Yes, and here we
So
are.
you're actually doing it over and over until you're going to be successful, basically.
Maybe because now because when I were younger, yes, it seems like everything possible. Yes, you have this passion, you have idea. Maybe when you know less about the market, about the models, how hard to earn alpha, you don't see obstacles. Yes, but with much more experience now, I see that maybe it's a more crazy idea than it seems, yes. But we still continue, we still believe, yes. And yeah, we have brilliant team, we have really nice leader, yes. And I think most of success, it's not about money, it's not about the idea, but it's about right leader with right ideas, yes, strong ideas, and good team too. Yeah.
Yeah,
We
obviously,
back him. Yeah.
I can assure that, being a part of a very, very productive and a team that have already proven its synergy together. I do think that everybody can feel how brute force we can and we can go with that particular aspect. Well, first of all, obviously. Secondly, is a topic that I would really want to talk to you today is about your background, your educational background. You obviously came from rocket science, which is a thing that I don't really hear, naturally. Well, I do have multiple conversations uh, with um, with many quants. Well, obviously, most of them went to study applied mathematics, but applied mathematics plus rocket science is not a thing that we're hearing. So I would like to ask you, what made you to pivot from being a full-time engineer to the finance world, to the financial world? What was like the thing that was the strongest incentivize yourself to make that pivot?
Yeah, it's a funny short story. Maybe on the third year, I decided to get internship in company backed by Russian government who develop new rockets. Yeah. I found this internship, passed all interview rounds, yes. But when I have visited the site, the facilities, the buildings where this team based, I saw totally poor, uh, totally poor environment. It's old buildings, everything destroyed. A couple of buildings without people. Yes, you cannot use internet in this facility because it's semi-government, backed by army. Yes, it didn't seem like a nice place, yes, to work, to start your career. And yeah, I discussed it with workers, with specialists who were trying to hire me, and they told me that it's not good place now to start your career. Yes, maybe it's you need to go to some private companies or even to the to the west company, because a lot of guys and girls from our faculty, from our university. Uh, were hired by Airbus, by Boeing, yes, because Russian math school, Russian math university, yes, but it's still valuable, was still valuable, I guess, 10 years ago for the best companies like Airbus, Boeing, maybe even for, I don't know, uh, I forgot it's Elon Musk company. It's not Tesla, it's SpaceX, yeah. But now and then time it wasn't a good place, yes, to start your career, and I have just decided, yes, maybe I need to find something more interesting. Couple of my classmates, especially one, he then time he learned finance, and he strongly recommended me, yes, trying to get some internship, yes, in finance in some company, asset management, broker, it doesn't matter, yes, just to like an entry point. Yeah.
Mhm.
And yeah, I got this internship, and it's another interesting story because when because I didn't have any experience in finance. I didn't know what does mean futures, equities, bonds, and other fancy words. But I was lucky because my interviewer, head of market risk, he was from my university, from my faculty, but 20 years ago, yes. And he decided that maybe he needed more smart guy, yes, with math and finance. It's not simple topic, yes, to learn, but it's much simpler than hard math. And I was hired only because of my math background, not my finance. And in a couple of next years, yes, I started to learn finance, got the CQF, passed CQF, yes, and continue to develop my finance knowledges.
Rowan, Rowan, let's speak about pricing derivatives. I think that pricing derivatives is a very intellectual initiation for our own discussion, and I would like to hear how or what do you think about pricing derivatives? What is your theory about pricing derivatives? What derivatives do you like to price? And obviously, each derivative has its own characteristics. So, how do you take those characteristics into account when you price them?
Yeah, good question. Maybe on the one hand, in our modern time, yes, we have dozens of different models for different asset types. Yes, for currencies, for bonds, for rates. Yes, for vanilla options and futures. And yeah, you don't have a problem to pick model. Yes, and even if you have to pick right models, yes, you just can buy or you already have some market history, yes, and you just can test every model what you have because and you even in our time don't need to code yourself with the model. Yes, you can get some ready to use models in some open source libraries. Python, C++ doesn't matter. And even now in 2026, you can ask your AI coding agent, yes, to help you to code, test, and move to the production some pricing models. Why not? But here you can face with two problems. The first one, how you can sure that model that which was trained, tested on the 20 years of history, yes, will survive coming here. Because now in our time, everything changed rapidly. Yes,
Mhm.
Trump moves the market like a child plays with ball. Yes, it's because it's sometimes it seems like S&P, Nasdaq, and other indexes and all of these stocks and other markets in USA is just a backyard of senators. Yes, Nancy Pelosi, it's one of the successful investor in USA, but she is a senator. Maybe it's a reason why. But yeah, back to the derivatives. I just like vanilla options for futures or for equities because for me it's much simpler, much easier, and more sophisticated. In the first place, in the second place, to be honest, I didn't have a huge experience yet to price some FX rates and everything because I have never traded, I have never worked on some desk who link to it. Yeah, just I like vanilla maybe because I had a really nice experience with it. What
Mhm.
about models? Again, I think it's not a problem to pick models. You just need to properly test it, yes, run it, and after that deploy. But 3 years ago, I was offered this interesting task by my ex-colleague from the Moscow office to price the options for cryptocurrency. But the main question was not the cryptocurrency, but how to calibrate your model. We took the Heston with diffusion jumps for mean and volatile, but we didn't train model. We didn't feed the parameters using some common tools. Yes, some optimizers packages, but we're trying to do it using the. Let me check. it was a narrow networks. Yes, how it was? We generate a huge data sets of all possible outcomes of parameters of these models. Yes, and how these models pricing each possible options with parameters. We learned neural network know
It really
everything.
reminds me. It really
Sorry.
reminds me of what I do right now. In one of my projects, I was creating a system to that takes an algorithm that I was developing, and that system supposed to you know robustly test multiple candidates. And when I'm saying the word multiple, I'm actually referring to thousand or even couple thousand candidates for each and every single YAML configuration file. And and that system, by the end of the day, is supposed to create candidates, and for that each and every single candidate represent a different strategy. Obviously, they're tested over universe of assets. They're tested over multiple commission status. So I would need to ensure that all the robustness testing are actually approved. And on the second layer of what I'm actually doing is I'm actually trying to build a portfolio. That portfolio is supposed to be you know, stochastically built. Um, and we would like to extract the features of or the weights of the portfolio in order to understand how to train models upon those weights. So that's an interesting approach. Might be similar, or might be familiar a bit with what you're sharing right now. But I do think and that's another topic that I would like to dive deep with you because I do hear that you're actually coming with the same standpoint that I am coming from. I I saw tons of different research papers that went over training machine learning models with not the rightest features, but with the rightest parameters. So this is not the architecture itself, starting with feature engineering pipelines, and after the feature engineering pipeline, you're actually stacking a machine learning model, which is not the only way, to work with machine learning. But machine learning could also come in the very last chapter when your of your architecture or layer of your architecture. It doesn't really mean how you reference it, but that machine learning model is supposed to be trained upon the outputs, not about the inputs. And I think that that reduces dramatically the amount of features. And it doesn't really matter if you're actually working with PCA, SVD, or any statistical dimension reduction technique that you have out there that you're supposed to utilize in order to understand what are the main characteristic of your data set. But you're supposed to train over the weights themselves in order to understand the actual language of the data that you're actually having. Now, I would like to ask you, what do you think about that perspective? What would you think about after training so many models about how to place them or how to see their preposition in your architecture in order to extract the most value out of it, out of those models or out of that capability to be to be correct or to be exact?
Yeah, it's interesting question because
Very long one.
yeah, it's a long one. Yeah. In the first place, a couple of years ago, when we have started, we read a lot of research papers too, exactly about what we have done, trying to to find some right approach. But the main problem with public research papers or fresh research papers that authors of all of these research papers they don't put their skin in the game. Yes, like Nassim Taleb wrote in his book. Yes, it's a problem that someone with even the PhD degree um, can wrote anything about the models, about the how they applied machine learning, for example, again pricing derivatives, show the risk metrics about the models metrics. But when you try to reproduce this research, you face that in your real data with your real trading, it just doesn't work. And for last couple of years, we didn't find any models which can help or improve or just yeah, make our trading better.
You
Maybe it's
know,
our problem. Maybe it's problem of a lack of our expertise. We are not experts in all machine learning models approaches, and I know that some hedge fund declares that they use it. But again, they just declare, but we don't know what under the hood. Yes, not they don't tell us. Yes,
yeah, they're completely closed. Yeah.
I think it's problem because now almost of quant research and quant sector, it's a Vanity Fair, yes, because everyone tells about the applying AI, LLM, I don't know, machine learning approaches, but to be honest, I didn't hear about some really great small fund who get stable return, stable yield with some predictive and stable again risk metrics for over the couple of years, 3, 5, or survive all regimes. Because even in our case, we had two brilliant models without machine learning, but still based on the real good market approach and real experience of our leader. But they were destroyed by beginning of one of them were destroyed 1 years ago, and the second one were destroyed by the beginning of this year. It was
And
really nice for
why is
three
that?
years, but
Why those strategies fall apart? Like what was
it's a It-
what was the
it's
problem?
tricky. It's tricky question. I can say that maybe a volatile regime changed, maybe uh, some market behavior, but it's just buzzwords. We don't know. Now we can measure it. Invested some time creating tool to measure alpha leakage of our strategies, and now we have some kind of control. We have some statistics, yes, how to look at it, but still don't have questions because it's again tricky question, yes, to understand. If we would understand, if we have had some understanding why, we wouldn't do these mistakes. Yes, it's problem of the question.
It's very interesting because as long as we have spoken, I think off record about alpha decay, and alpha decay is a very forgotten phenomenon which market change and they change pretty rapidly in a matter of nanoseconds each and every single time, and your alpha tend to decay because the hypothesis that you have built and you have tested and you have robustly tested will be not very realistic in the next few months, couple of months, which is a matter of no time in terms of a hedge fund that needs to, to have yield to its investors. And I would like to ask you, out of your experience, how do you actually avoid in your research alpha decay? What is like the main research types that you're actually into consideration in terms of understanding, oh, okay, now I understand what was the failing part of that particular strategy, and I understand what was that failing problem of that particular strategy, and you combine the understanding or the considerations with each other. And then you have like a much more proper context of how to exclude those parts or include those parts into your research pipeline. And I would like to ask you properly, how do you know from past experience to make some assumptions into your research procedures about making much more robust strategies, or it doesn't really matter with or without machine learning, but in your mind, in your hypothetical mind, how do you think about it?
Yeah. Good question because again, I think you can fit and overfit every model. I mean, you can take to SMA long and short, and for some decent period time, even 10 years, even for each stock, for each asset, gold, oil, I don't know. You can find these two parameters for short and long SMA, which will produce you really nice results over the 20 years. But I guarantee you that your strategy will be blown up because you just overfit it and you just find some two possible numbers of the unlimited space, yes, of possible values for these parameters. What we try to do, it's not some smart approach again. We just, in the first place, we trying to test it on the decent amount of data. In the second place, our results, our models, our approach should be consistent, should be stable over the weeks, over the months. We because again, I saw a lot of really nice backtest models, but when you start to dig deeper, you find that most of yield were earned in 3 months or for 4 months, yes, each year. Some totally different months. It could be beginning and middle. It could be maybe because you opened the right trade after the Trump or previous president, yes, told something, yes, and you just was lucky. And we trying to investigate why we open each trade because we have some mid frequency. We intraday. We made only intraday trades and hold our position up to 9, 10 hours, and we can investigate each trade. Almost each trade, I can say, why we did it, yes, and prove that it was not luck, but but backed of our hypothesis. In the first place, we started to test our ideas, our strategies versus the noise. It's mean we just trade some random signals at the random point of time, yes, and just see that maybe even sometimes and run some Monte Carlo to prove that call on the returns of the our strategy have really big difference versus the return of the random strategy of the random signals. Yes, because if it's close or it's a little bit more, you can say that you're really close to the some noise and just yes pick the right parameters. Uh, we try to keep our number of parameters of models as low as possible. Yes, because yeah, you can. Um, I think it's a big problem sometimes in machine learning or using the neural networks. You can use a lot of layers, different numbers of neurons, of different numbers of parameters, and you can overfit it easily. Yes,
Right.
I faced in LinkedIn. I faced interesting theory and even some practical proving of it that if you test your idea, test your backtest, your strategy a lot of time, more than, for example, 100, yes, it decrease the quality of your strategy because after the 100 of attempts, if you smart enough and have time, yes, you will make your strategy looks good on some decent amount of time.
Mhm.
As low as possible, keep your amount of parameters and attempts to find the right parameters, the right value for these parameters, the right approach for your strategy. Because if your core idea need to a lot of conditions, a lot of parameters, etc., you just overfit it. Yes, I think it's so clear for everyone. And
Mhm.
yeah, that's all I guess because again we trying just we backed by good idea but good level of real experience of our founder, yes, and trying just to cover it into the algo, into the code, yes, and some algorithmic trading, yeah.
I got it. Okay, so let's hypothetically say that you're running a stochastic process like Monte Carlo, and that occasionally appear to be very, apparently you understand that your random noise it is very fluctuative, but your strategy is resonating with this random noise. Meanwhile, that your strategy is worth nothing. Then I would like to ask you, what do you do then? What do you do at that point? And that occasionally happen pretty frequently. What do you do when you're actually seeing that you have no results to your trading strategy? Do you have a proper due diligence about what have just happened? Or you say, okay, this is a complete garbage. I understand what is a complete garbage. I'm going to be moving forward with a different idea, but on the same market, same different features. What do you do when you're actually failing with your research process, which is a thing that we have on our day-to-day basis, let's face it.
Yeah, uh,
Well,
it's
that's
hard.
goodness.
I mean,
Yeah,
yeah,
well, that approves everything.
yeah, because I think you can create a bright research process. In my previous work in a Dutch company, we have I work with really brilliant people in terms of portfolio managers, quant researchers, developers, and they have a really nice, straightforward, amazing research process, and it was rewarded by a really nice yield. But I think it's uh, what I try to say. It when you quite small, you don't have enough money, time, big clients who can wait your until you make your process good. Yes, you half of time you just have your gut feeling, your experience, and trying to based on the numbers, statistics, and what you see. Yes, decided what happened or happens with your strategy. In our case, for example, when we see that we started to lose money 1 week, second week, and after second month, we usually deprecate with strategy, starting to investigate. Maybe it's some market behavior, maybe it's problem with stop losses levels and our approaches, because we divide our models on the core idea and how we execute and how we exit. Because yeah, I recognized it only the maybe a couple of years ago that for mid-frequency trading, day trading, the main problem not to find the entry point. Yes, you can base it even on the some decent volatility model, but your main problem when to exit, to understand that it's the top of your earn or it's the bottom of your loss. Yes, and just take your chips from the table. Yes, and stop it. And I think the biggest problem even then just to find the entry points or decide that your core idea stops to work. And yeah, trying to answer your question, we just trying to make as much as possible checks what happens with trades, what happens with signals. And yes, as I said before, yes, we just see uh, decaying level, decaying rate of our alpha of our strategy returns for the last period which warn us. Yes, and compare with noise. If noise became much better or similar to our strategy, and it's yes, for last couple of months, I think it's a big signal that something changed, something extremely risky became, and you need to stop and investigate. For example, for last strategy today, we a little bit even arguing maybe we need to back to idea and trying to find new exits, maybe we need to fit the parameters. But my opinion was that it's that all of these tests show us that we need to stop, maybe back to the table and trying to create new strategy or massively change existing. My colleague, he decided that maybe we need just to fit some parameters, and yes, we have the same numbers but two different opinions, because it's based on the two different experience. And yeah, we have just how to say,
Mhm.
and we just need to debate and trying different approaches, but everything should be based on the numbers and your conditionals. Because as I said, if you're a huge company, you backed by the big money, you have enough time, yes, to play with your model. It's okay, yes, to trying to make this official some limited process, research process, decision process. But when you small fund, small team of couple of guys in research team, maybe it's better, yes, to run faster, yes, and trying to find just a new idea than trying to restore, yes, what already died.
Mhm. No, obviously. You know what? Let's shift the gears onto some different, onto, onto the same subject, but a different, but a different one, a little bit different. You have mentioned that you are working with very clever portfolio managers, and well, obviously, being a clever portfolio manager, that stands um, to work among them. That's a privilege by itself. But I would like to ask you, how do you guys are correlated to each other? He is managing the portfolio of strategies that you develop, but how do you know how to provide or the same like the necessary strategies or the necessary models to the portfolio managers to to enrich his portfolio with new and different variety, different strategies, different diversification, and so on.
Yeah. Mm, Honest question. I just was lucky to be hired by a really good mature team, because when I have joined them, they already work, I guess, for 3 or 5 years. They survived massively disrupted of their own models, but they got new mandate, yes, to create something new from the scratch, yes. And in the second attempt, they were extremely successful, and I just joined them after then. They won this race, yes, to find their own path, how to produce alpha, how to keep it clean, and earn really nice money. Yeah. Another part of your question, yeah, I was more. I wasn't researcher. I were more developer. Yes, and I provide some service for portfolio managers to look at the strategist result, yes, to investigate and making some postmortem, I can say, or analyze based on their own models. And yeah, I just help them to move from the static PNG files and some reports which generated by the 1 week ago data, I help them move to the some kind of real-time dashboards, yes, in your web browser, make it more realistic, make more uh, live, yeah. And yeah, again, I was in terms of this team, I was a student, yes, because they all had a really nice degree experience. They played like a really nice, well played team. They have all of this synergy. Yeah, I again, honest question. I were extremely lucky to be hired by this company and especially by this team, and I learned a lot of about how to measure, how to investigate your strategy, and how to make really nice research process. I couldn't apply these knowledges, to be honest, in my current place because again, you cannot compare big company, big asset management, and small hedge fund back then,
Mhm.
really small money. But again, it's a good fundamental knowledge, yes, to understand how big guys do research, yes, and invest really huge money. Yeah.
Mhm. Well, obviously, this is obvious. This is a fascinating process. Um, I would like to ask you about being a researcher in a corporate because well, APG is a corporate, is a very large company, and not necessarily you'll have your own freedom to have your own to have your own research, and in most of the larger firms, like the largest and the most known ones like SIG, Citadel, well, obviously they have their own researchers, and each researcher has, like, space to commit with a research type of himself, and that drives follow managers and SIG to with a very diversified portfolio. And I would like to ask you how it is like for you as a researcher to research in a corporate, which is very different, or I won't say that it's slightly different, but it is still different like in comparison to the other model that is being used by Citadel and SIG.
Uh, for example, for APG, research team had this capability as far as I know, and I saw such examples when some even I can say junior maybe researcher uh, could. Could suggest some idea, yes, and after that, if he or she would be given right, yes, to develop it, and some senior researcher joined him or her, then can start to produce some MVP, yes, to show it, and after that, even I know a couple of cases when such a research like MVP, yes, started by junior researcher, could reach the production model, yes, and run on the on the big portfolio. Yeah, I don't know how it doing in Citadel and other big funds and companies, but again, I think it's when sometimes in LinkedIn guys and girls from the university write me and ask me some yes advice, and I honest answer them that I didn't have huge experience in corporations because in Russia we didn't have and now exactly don't have big companies, big names in terms of funds, hedge funds, investment banks. But I strongly recommend to the freshly graduated go directly to the big names because there they will have opportunity to develop something interesting, yes, and if they will have some free time, because they backed by the huge corporation. And if you made mistake, I mean, research some stupid idea or idea which led you to nothing, it's not a big problem, right? Because you just waste of time of one of the research of the thousands. But in small funds or mid-sized funds, it's necessary, it's essentially, yes, to be right or not to waste a lot of time on unsuccessful things like some stupid poor research. Yes,
Mhm.
and I think the biggest difference in small funds and mid-size companies and huge corporation, everyone I think have opportunity, everyone has opportunity, yes, to suggest something, to research something, but cost of the failing in corporations much lower, yes, and you can easier to how to say, restore, yes, after the failing. But in a small and mid-sized company, you can be fired, yes, after the if you spend to half of the whole year, yes, to research something that which will not lead you to the earnings, yes, to the yield, doesn't bring something useful for portfolio managers, for the fund in general, yes, and you can be easily fired. I think it's good, yes, to start your career into big corporations, earn as much as possible experience, yes, try to different asset types, models, and, to work in different kind of businesses, even, yes, investment banking, hedging, buy
Right.
side, sell side, yeah. And after that, after 10 years, you can easily go to run your own fund or join to this small fund. Yeah, I think it's better track.
Mhm. I got it. Okay. Speaking about your own hedge fund, I obviously would like to dive deep into a topic that we haven't really discussed previously, which is machine learning. And machine learning, you told me that you have used multiple amount of different models, but each and every model has its own characteristic, has its own learning methodology behind it. Well, obviously, gradient boosting symbolizes decision trees and the gradient boosting in between the trees and SVMs are completely different and so on and obviously each and every single one of them has a very different approach. And I would like to ask you, what is your approach about machine learning? What type of models would you like to incorporate with your production systems? Why those models are actually coming across your consideration, and what is the main factors that you're looking after when you're looking to deploy such a model?
Yeah, as I said, we tried 2 years ago to apply some models like boosting, especially cat boosting. Yes, so when we had idea about behavior of our models, about numbers what we see. Uh, yeah. If you have time and power to run it, you can easily to run all models what you have. We even use some kind of ML framework for Python when you can just pick the set of different models, the range of the parameters. Yes, put your test, train, and data sets, and just run on your server for the week. Yes, and after that, you will have a big set of different models with different parameters to find what's the best suit for you. Yes, it's some kind of brute force, but yeah, now modern time, why not if you have enough computer power?
Mhm.
I think the gold rule, yes, to start from the cat boosting because it's
Well, categorical boosting is a very particular, particular model because of the because of the categorical ordering of the tree itself.
yeah, you're right, and I wanted to say that it's massively depends on your data. I mean, how you look at the market, because again, why we rejected all of these models and trying to use some simple math and logical approaches, because now how we look at the market, it's really hard to put it in some categories or made some discretionary features, yes, and run some models, because we don't know how these models should work, how they should divide, or based on these features, decide should we open long and short, and when we need to close it, because our features, our approaches doesn't look like a right set, yes, for machine learning techniques.
Mhm.
And yeah, again, you can find a lot of research papers that when they put all of these categorical features, yes, about the market divided into clusters, and they even get some really nice results based on some metrics, R square, I don't know, mean square error, etc., etc. But finally, when you're trying to reproduce it in real market with real data, you can see that it's so similar to the just some white noise.
Mhm.
I can say it's based on my humble experience. Yes, I didn't cover all of the topics, all of the asset classes, all the approaches. I believe that there are plenty amount of funds who successfully applied machine techniques, because I saw like hundred dozens of job descriptions where then some funds, yes, hired only ML specialists. You need to some Kaggle to be a Kaggle grandmaster. Yes, prove your degree, prove your experience based on some maybe worldwide competitions. Yes, I think they know something about how to prepare market data, how to extract from the price and volume features, and how to apply this boosting trees and etc. etc. But it's not our approach. We tried it, but decided that maybe our strange side, yes, our advance, how we look at the prices as a market, and maybe you mentioned it's before we're using the L1 market book order. I think it's the most detailed data about the market, and when you see everything, maybe it's much better than just trying to extract some feature from the open higher low clauses like 99% of research papers do, I guess. Yeah.
Okay. Very interesting approach, to be honest. Okay, so I would like to dive into the last topic for today's discussion, and I would like to ask you, Roman, what do you think uh, about about the leader? You have mentioned so many times that you have a really strong leadership behind you, and we started this conversation with, the sustainability of each and every single individual when they belong into a very productive and very and very strong team to all together, and that actually increases everyone's productiveness, individually, and correspondingly everybody in the team, everybody who belongs to the team, and everybody is standing among the team. And after years of experience in the financial markets, I would like to ask you, how is strong leadership assists you with your day-to-day job? How do you see its assistance? How do you capture, um, ideas that have been shared, in your network, and how do you actually apply them?
Yeah. Uh, I think it's one of my favorite topic in quant finance and maybe in corporate work at all. Um, in the first place, I think so often experience, previous results, and leadership uh, don't come along with each other, because I saw a lot of experienced specialists, experts, head of desks, doesn't matter what the asset types, who earned a lot of money, for example, before the big financial crisis of 2008. Yes, in especially in Russia. Yes, from the beginning of the century till this crisis for 8 years, everything went up, and you can apply some really simple, some primitive models on the market and earn really nice money. And everyone was as inspired, yes, put the money into the market, bring it to the investment banks, to the funds, and a lot of big names of the star traders were made in that time. But for after the financial crisis, after the another crisis, yes, especially for last 5 years, market is extremely changed, world is extremely changed, and how we trade. exams change too, and all of this experience, highly graduated with proved previous results, uh, traders, head of desks, leaders. It's became that they were not leaders. They were right persons in right time. But yes, but after that, when difficult times came, all of these um all of this legend about the strong patient, about the really nice knowledge and gut feelings, they disappeared.
Mhm.
Yeah, and but for example, why have joined current fund, current company, because our founder, he survived all of his crisis and he showed me his natural, I call it natural passion, when you like what you do, not for because everyone like it or everyone talks about it, or because you can earn big money for the short period, but because you just like it. Yes, without any conditions. For example, nothing makes me to wake up or to be waking up till the morning, yes, and send new models, new ideas to the chat. By our leader, our founder can easily do it because, and he not much, he just older me, he much experienced me, but I would like to sleep at that time, but he would like to research market, looking at the plots, yes, to the terminal to discover data, and it's inspired me. To be honest, I cannot call myself some kind of brilliant expert or specialist. I just good worker. Yes, I have decent experience, decent knowledge. I like what I do. Yes, I can combine math, uh, programming, and finance knowledge. But I think if you would like to be successful, you need to have natural passion in some area. It doesn't matter. It's finance. I don't know. It's engineering, whatever. Or you need to follow such a leader, not the false leader who earned his money for 5 years, yes, in gold era, and after that just told you some fairy tales about how he or she was successful. But you need to see this natural passion. It's hard, yes, to
Mhm.
investigate, to test it, yes. But when you found such a person, you need to follow it. You need to stick to him, yes, or her, and just learn as much as possible, yes, and become a valuable member of his team. Yeah, I think I was lucky. Yeah, as I said twice or more during our recording session. Yes, I just was lucky. Yes, to become a right person, right time. Yes, to join some brilliant team, brilliant companies into their best time. Yes, and now I hope I did it again 2 years ago, and this small fund, this small team will reach some success. We will not have a goal, yes, to earn all money, but just earn some buck, yeah, and buy what what we want to pay for our life, yes, pay the cost of this, the growing cost, yes, of our life, and to spend more time with our families. But now we need to work a little bit more than average, yes, and I hope good leader, yes, can lead you to the good results.
Mhm. Obviously. Well, I completely agree with you. I can neglect those points. And again, Roman, I would really want to thank you for your participation. It was very, very great conversation about we had a very general, very understandable conversation diving into each and every single topic and actually extracting the rightest information, which is the target. of this podcast and that stage to come or to come across for all types of listeners. And I think that that recording session itself will be highly appreciated by the audience. And again, I really want to thank you for the privilege to have you, and it was very, very awesome. Thank you.
Yeah, thank you for invitation, and I really hope that even the tiny piece of what we discussed today will be
It
useful and
will be.
helpful, yes,
It will
for
be helpful.
beginners.
It will be helpful. It will. So yeah, obviously, again, thank you very much. And for you guys that listening, thank you for listening, and see you next time. Roman, thank you. Thank you for everyone. Bye bye.
Yeah, bye.